Bitcoin is moving sideways again, but every time we see this kind of consolidation, it usually means a big move is around the corner. Right now, Bitcoin is trading around $118,569, and it's stuck in a very tight range between $118,500 and $119,000. This is an important zone because whenever Bitcoin consolidates like this, traders are waiting for the next big push. The low trading volume we're seeing right now also confirms that the market is in a wait-and-see mode. When volume is low, it usually signals that buyers and sellers are both hesitant, and this kind of setup often leads to sudden volatility once a breakout finally happens. Let's take a look at the indicators. The stochastic RSI is currently around 23, which is deep in the oversold zone. This is important because it suggests Bitcoin could be ready for a short-term bounce. Whenever the stochastic RSI is this low, we often see a small recovery move as traders step back in to buy the dip. At the same time, the regular RSI is around 52, which puts it right in the middle of the neutral zone. This tells us the momentum is balanced, and Bitcoin could move in either direction depending on which side, buyers or sellers, gains strength first. The MACD, however, is still showing slightly bearish signals. The histogram is red, and the momentum is tilted toward the downside, meaning sellers still have a bit of control in the short term. But the bearish momentum is not strong, so it's not a clear trend, it's more like a weak lean toward the downside. Now, let's break down the bullish case. If Bitcoin can break above $119,000, that would be a key short-term breakout. The first target after that would be $120,000, which is a psychological resistance level. Beyond that, the next major target could be $121,500. Why those levels? Because they've been tested before, and whenever resistance gets broken, it tends to attract more buyers, especially momentum traders who like to ride short-term breakouts. Add to that the oversold reading on the stochastic RSI, and we have a decent probability of Bitcoin making a push upward in the near term if buyers step in at the right moment. On the other hand, we need to be cautious of the bearish case. If Bitcoin fails to break above 119,000 and gets rejected again, then the immediate support is sitting at 118,000. If that level breaks, the next downside targets are 117,500 and then potentially 116,000. That drop would match what the MACD is currently hinting at, which is a continuation of bearish momentum. So, the bearish scenario is not off the table, and traders should keep a close eye on those support levels. Zooming out a little, it's important to remember that this is only the 15-minute chart. Short-term charts can be choppy and often give mixed signals. For the bigger picture, traders are also watching the daily and weekly charts. On those higher time frames, there are still bullish narratives in play, including the upcoming Bitcoin halving in 2024 and the growing interest from institutional investors. These macro factors can create long-term upward pressure, even if the short-term charts look uncertain. So, to sum it up, Bitcoin right now is consolidating between 118,500 and 119,000. The indicators are mixed. RSI is neutral, the MACD leans slightly bearish, but the stochastic RSI shows oversold conditions that could spark a short-term bounce. If Bitcoin breaks above 119,000, we could see a move toward 120,000 and possibly 121,500. But if Bitcoin gets rejected and drops below 118,000, then 117,500 and 116,000 are the next key support levels to watch. What this all means is that Bitcoin is at a tipping point. The consolidation suggests a breakout is coming, but the direction will depend on whether buyers or sellers take control. The next move could be decisive, and traders should prepare for both scenarios. If you're watching Bitcoin closely, this is the time to be alert, because sideways ranges like this don't last forever, and when they end, they usually end with a big move.